Get ready for the biggest financial event of the decade, because SpaceX has officially picked a date for its initial public offering. We have everything you need to know before what could be the biggest IPO ever. We're talking about massive valuations, potential market disruption, and the details that will shape the future of space and technology. Should watch for in the coming years. Finally, we explore the wild world of pre-IPO trading. We break down how Hyperliquid launched a synthetic perpetual futures contract for SpaceX, tracking its valuation, and what this means for retail speculation before the official S-1 filing. Stay with us to see what this means for your portfolio. SpaceX has set its timeline for an initial public offering, with a debut scheduled for June 12th, according to reports from the Wall Street Journal. The company is generating significant market attention, drawing comparisons to recent high-profile offerings like Cerebra's, particularly within the artificial intelligence sector. Sources indicate that SpaceX is targeting a fundraising goal of $80 billion or more, with valuations speculated to range between $1.75 trillion and $2 trillion or higher. This immense interest stems from investors viewing SpaceX as a pioneer in the space economy, driven by its advancements in reusable rocket technology, which promises faster, more efficient, and lower-cost access to space. SpaceX has successfully conducted numerous missions, including 11 for NASA, utilizing reusable rockets. Furthermore, the company's expansive portfolio includes Starlink, a low-Earth orbit satellite network providing global internet access. Starlink boasts nearly 10,300 satellites and has reached 9 million users, with plans to deploy up to 42,000. The strategic growth continues with the acquisition of Musk's AI firm, xAI, which is developing the Grok digital assistant. Analysts suggest SpaceX is positioning itself to build a sovereign AI stack, controlling the entire AI infrastructure from intelligence to hardware. The ambition extends beyond space exploration, with reports suggesting discussions between SpaceX and Google regarding the potential for in-space data centers, and Musk tying aspects of his compensation to the colonization of Mars. While reported financials show a collective loss of $5 billion in 2025, the Starlink division remains highly profitable, generating $11.4 billion in revenue with 63% EBITDA margins. At a $2 trillion valuation, this translates to a trading multiple exceeding 108 times trailing revenue. As the registration statement is anticipated by midweek, investors are urged to conduct thorough due diligence. Key areas for scrutiny include the company's internal financials and the lockup provisions detailing insider shareholding periods. Financial experts advise caution regarding immediate investment on the IPO day due to expected volatility, suggesting that analyzing earnings trends and seeking entry points in the first few months of trading may yield better results. SpaceX's initial public offering is poised to be a major event on Wall Street, with reports suggesting the company could see its stock go public as early as this summer, potentially valuing the company at around $2 trillion. As investors anticipate the IPO, attention is turning to when SpaceX might appear in various exchange-traded funds, or ETFs. The timing is not guaranteed, as it depends on the specific index construction methodology of the fund. While some investors might expect inclusion in the S&P 500, the Vanguard Total Stock Market ETF, VTI, could potentially feature the stock first. Standard & Poor's has stringent requirements for index inclusion, which, if strictly applied, could delay SpaceX's appearance in the S&P 500 until 2027. However, in response to the anticipated IPOs from SpaceX, OpenAI, and Anthropic, both Standard & Poor's and Nasdaq are reportedly discussing ways to expedite the inclusion process for these megacap offerings. In contrast, the Vanguard Total Stock Market ETF tracks the CRSP US Total Market Index. Under its methodology, stocks typically require 20 trading days of history to meet investability requirements. Crucially, however, there is an exception for fast-track IPOs, which SpaceX would likely qualify for. This fast-track provision allows stocks to be added to indexes after just 5 trading days. Consequently, SpaceX shares could appear in the Vanguard Total Stock Market ETF as soon as a week following the IPO. Index providers are actively revising rules to accommodate the unprecedented wave of AI-related IPOs, with S&P and Nasdaq potentially allowing immediate inclusion before the official IPO date. Though the Vanguard Total Stock Market ETF represents the largest fund where the stock could appear in a matter of days. SpaceX is gearing up for an initial public offering in June, aiming for a staggering valuation of $1.75 trillion, potentially making it the 9th most valuable public company. While the anticipation is high, historical patterns suggest that megacap IPO stocks often underperform in the years following their listing. Experts caution that initial high valuations limit the potential for significant post-IPO stock growth compared to smaller listings. Economist Jay Ritter of the University of Florida noted that companies with over $1 billion in revenue, like SpaceX, have shown market-adjusted returns of -2.1% over 3 years following an IPO. Furthermore, there is concern that if these highly valued companies are fast-tracked into major indexes, their statistical tendency to underperform could negatively impact investors. However, analysts suggest that a company's initial index weighting will be determined more by the amount of stock raised during the IPO than by its valuation, until insiders sell shares. The report emphasizes that while hype exists, investors should weigh historical data against long-term potential. The article also briefly touches upon other investment opportunities, including a report on an indispensable monopoly company critical to NVIDIA and Intel. SpaceX pre-IPO market goes on-chain as Hyperliquid launches synthetic trading. Hyperliquid has activated its decentralized exchange framework by launching SpaceX USDC, a synthetic perpetual futures contract tracking the pre-IPO valuation of SpaceX following its launch on May 18, 2026. The native HYPE token surged by 7% in 24 hours, signaling significant market interest in the venture. The synthetic contract, developed by Ventuals using Hyperliquid's HIP-3 standard, references a starting price of $150 per share, implying a market capitalization of $1.78 trillion. Traders can speculate on SpaceX's valuation without owning shares, utilizing Hyperliquid's USDH collateral and a 3x leverage limit. SpaceX experienced a rapid initial climb, spiking to $216 before stabilizing at $202.89, achieving a 12.72% gain on its first day with $33 million in trading volume. This price action suggests an implied market open of $2.4 trillion, positioning SpaceX for what could be the largest initial public offering in history. SpaceX previously filed confidentially with the SEC on April 1, 2026, targeting a public offering valuation between $1.75 trillion and $2 trillion. The company also holds 8,285 Bitcoin in Coinbase Prime custody, a detail that will be disclosed in public filings once the S1 is released. Currently, direct retail access to SpaceX equity price discovery is limited, with secondary platforms like Forge Global requiring accreditation and minimum investment thresholds. However, the SpaceX USDC contract offers retail traders broad accessibility via a crypto wallet and USDH margin, bypassing traditional accreditation barriers. Analysts are closely monitoring the weekly volume of SpaceX, with a $33 million first session volume establishing a baseline. Sustained open interest above $21.8 million in subsequent days is expected to confirm ongoing retail demand. The success of SPCX will serve as a benchmark for future pre-IPO perpetual markets on Hyperliquid, alongside POPNAI and PANTHRO. The ultimate catalyst for market dynamics remains the official S-1 filing. If SpaceX goes public, price discovery may shift from the synthetic market to publicly available financial data. Any official statements from SpaceX regarding derivative products linked to its valuation are anticipated to be a key risk event.